What is your take as to whether this can allow emerging markets, China's market as well, to rally into next year?
I think it's good news, but I don't think it's over. I think, they had a little bit of a truce here in Argentina. But looking at things from where I am here in Brazil, I think the emerging markets outside of China will probably benefit from this trade war because a lot of the production will be transferred from China, and the exports, the Chinese will then establish more manufacturing in these other countries. It's interesting, here in Brazil, the Chinese have purchased 3 banks already, and they're buying up land. So you can see their expansion in other parts of the world as a means to diversify their manufacturing and, perhaps get entry to the U.S. in an indirect way.
So you're saying that the trade war is already having an impact on global supply chains, and there are some distinct winners. Which markets would you be betting on it, and how are you making those bets?
Well, I thought here with Brazil. Brazil is ideal because they're in the same time zone as the U.S., and they have pretty good manufacturing capabilities here. That would be one. Then you have to go to those countries where there's been an incredible decline in their currency. And, of course, Turkey is the first one that comes to mind. And Turkey needs foreign exchange very badly, so they would be a candidate. Then you have Bangladesh for garments, and then you have Vietnam for shoes. So a lot of the countries, I think, will be able to benefit from this.
Mark, one of the main ways investors seem to have focused their concern about this whole trade war issue is just worrying about a hard landing in China or something disorderly happening in the economy there. What is your read on the current state of the economy and how durable or fragile the growth is there?
There's no question that the private sector is heavily in debt. If you look at the numbers of debt to GDP on the private side is about equal to that to the U.S. And as you know, the U.S. got a big private debt sum up compared to GDP, but China's right up there as well. So the Chinese are going to have to do a lot of reforms, particularly in these companies, semi-private and private companies that piled on incredible amounts of debt.
Mark, which EM is most set to benefit from the pullback we've seen in oil prices?
Probably India is going to benefit. As you know, they're very heavily dependent upon imports of oil. And, of course, they're a big processor of oil. They bring in crude and then process it and then export the products. So that also will help them. So I think it's a combination of things. But India, of course, is probably the most to benefit. And, of course, China will also benefit.